The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the March 16th, terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. And more importantly, I'm here to serve you. So feel free to pick up that phone. Now is not too soon. 877-927-6648. Internationally, 727-445-1044. So let's go ahead and get this show started on this terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we have the Dow trading off 12 points at 20,937. S&P is off 3 at 2382. NDX 100 off 6 points. NASDAQ Composite is flat. Russell 2000 is up 3 points. Semis are off a point. New York Stock Exchange is up 16. Trannies are up 29. Gold is up a few bucks out here. My screen says 27 bucks. Most of that coming yesterday afternoon. Silver is up just a tad. Light sweet crude, though, that is back 15 cents, trading at 49.23. Leading the charge here, dollar-wise, the upside is Tesla, up $9, 3.5%. Priceline is up $6, 0.3%. Transdigm Group up $5, a couple of percent out there. Baidu up 4.70, about 3%. China Logic Group up 4. Ardog Group SA. Yeah, I think that's how you pronounce it. ARD, though, that's a ticker symbol. It's up 21% or $4. To the downside, you've got Biogen leading the charge off $14 or 5%. Illumina, that's down $6. United Therapeutics down $6. You knew I could say it. Biorad having a red day, up 3% or $6. Intuitive Surgical down. U.S. Physical Regeneron. It looks like the IBB. Oh, there it is. The IBB is struggling today, down 1 3/10% or $4. So where do you want to begin? I tell you where I want to begin. Kind of a flattish market, and where there's plenty for us to talk about. There were a couple emails that came in late yesterday afternoon, and I didn't get a chance to get to those. So let's do those because those folks have been waiting a long time. The first one is from Adi, and what she was looking for is we're doing this live. I haven't taken a look at this stock chart out here. That's the way to do it, right? She's looking for, this is the KRE, the Spiders, S&P, Regional Banking ETF. And the request is to try to find a buy point for something that she could hold 3 years or more. So that says, hey, long-term or intermediate-term time frame out here. So as we take a look at this ETF, we're going to notice a couple of things, Audie. Number one, we're going to notice that there's significant resistance just simply by candlestick charting techniques up at the March 2nd level. Now, the high there was 59.68. The high prior to that on the day before was 59.60. So you can see that this candle here exceeded the prior day high and low. So not only is this a big old bearish reversal candle, which, by the way, there was a sign of strength on that prior day of March 1st with 10.8 million shares, coming down with 7.2 million shares. In one sense, backing off with light volume, but that's still, compared to other days out there, it's not exactly what we'd call pulling back on light volume. So super resistance out here is up at that 59.68 day. That is key reversal session. So it should suggest to us that there is some retracement going on. Therefore, the question, hey, where should I buy this? Since you are looking for a long-term hold, I basically am going to ignore the daily market profiles out here. Now, I'm not going to ignore them completely, but I'm going to ignore them from the standpoint we're going to go ahead and turn them off on our system out here as we speak right now, and we're just going to pay attention to these green horizontal lines. As we can see inside the current box out here from a weekly perspective, I do have daily candles out here, but the structure of this box suggests to you and I, Adi, that the entire price range should be explored. That means you should see KRE head down to $54.10. Now, at $54.10, that would be your first place to consider taking a long-term buy on this. What you don't want to do on a weekly basis is see price close below, not really the 54.10, but now because we have a swing point that is nearby, we're looking at January 18th. So on a daily basis, this is where you go back from a daily. We'll take a look. You can take a look at it on weekly as well. But the daily is on January 18th, there's 7.6 million shares. If this pulls back into the 54 area, like we believe that it will, what you want to see is less volume than 7.6 million shares. If it's more volume, then, Adi, you've got to write back, remind me to take a look at it, and then we try to figure it out. Because any break below that, because there's really been no base established, says that this could actually pull all the way back into the 40s area. Now, is that what we're projecting here first? No, we don't have any reason to do that. And we would also go ahead and utilize just simply some retracement levels. These retracement levels I would just initially look at are from June 27th of last year to the high a few days ago. And you'll see the 0.618 retracement levels in that 44 area. So breaking through 54.10 probably does open up the door, not just to 50, but to 44. Now, I didn't mean just 50 cents out there. I meant $50.31 out there. So, Adi, that's what I would be looking at. Be patient and see if this thing will pull back to 54.10. Now, if this does clear that super significant resistance zone, and actually let's put this on a weekly basis, probably good to do that because we probably see a high volume high out here. Do we? We don't. I thought we might, but we don't. So you're still going to watch for that high. If that high gets taken out without the train will have left the station without stamping your card. But right now, I believe you should be patient and look for that 54.10. So I hope that helps you out. Thanks so much for writing in. Sorry that my ISP, nothing that I can control, didn't deliver that message to me until late in the afternoon. Actually, it was about 3 or 4 minutes before the show ended. Now, Brent in Martinez, California. Brent had sent in a request asking if I could take a look at light sweet crude, basically the whole 9 yards of light sweet crude. So let's go do that for Brent Rooney. Trading out right now at 49.20. We're looking at the May contract out here, down about 18 cents today. So here is our take. We just have the weekly profiles on my screen right now, so that's actually good. That's cool. When we get back from this breakout here, which, by the way, says support is at 48.76. So let's keep looking at it. It's a daily time frame chart we're looking at, yet it's weekly market profiles on the system. So we get back from this break. Let's go ahead and add the daily. Let's give Brent the best read that you and I can give him. Steve Rhodes, TFNN. Right. Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we're taking a look at light sweet crude for Brent in Martinez, California. And here is, from this perspective, with regard to what it is that we see out here, here's what we know. Light sweet crude came all the way back to a support level, actually broke through the support level of its TAS weekly profile, that being 48.76. It was down there just for, basically minutes, if you will. Never actually tested or touched the swing point. The swing point was from November 14th. What does that mean? Just means it hasn't made a truly 100% move by testing that swing point in the general vicinity, but close but no cigar, as they say. So as we take a look at light sweet crude, the question would be, is it out of the woods, right? I would think the question would be, is it out of the woods? Is it ready to start, continuing to trade within this, what we can call now is certainly a consolidation-ish type pattern, fairly large consolidation, right? So, that would be a reason, I would think that would be a reason to go take a look at it, even though you didn't make the complete 100% move of a move, close enough to call it a consolidation. So is it out of the woods? No, I don't know I can answer that from a daily perspective. So from a daily perspective, the answer is no. We don't have enough information to suggest that this is out of the woods. You might say, well, how can you conclude that? This is how I would conclude that. Number one, what light sweet crude would need to do in order for us to say, yes, it is out of the woods, we would need to see it close above its daily profile that just formed 2 days ago. So that's the beauty of it, right? Because we have a brand new set of benchmarks, both at support and resistance. And this one that we're focused on is resistance, numbers 50-34. So, Brent, even though this is not the question you asked, I'm talking to you as if I was talking to you, because I am talking to you, is you need to see light sweet crude close above 50.34. What it's done so far, it's just bounced up to that weekly profile, that center of the box at $50.16, and has gotten knocked down. Now, it will really not be out of the woods if we were to see it close below 48.37. Then that says, okay, that swing point gets tested, that being November 14th, anywhere between 45.78 and 47.13. Candle-wise, is there anything here? Because, Brent, you asked about candlesticks, anything that we can draw any meaning from? And the answer here is no. Not really. It came back to support. So by not getting back into this swing point out here, the last time we saw a bullish candlestick signal at this price area was November 30th. So it's a wide-ranging bar. We can see that light sweet crude pulled back to support, but now we have these other resistance-type zones to contend with. So light sweet crude would be on its way north if it can close above 50.34. It'll be on its way south if it closes below 48.37. So I hope that assists you in your trading out there. I don't see anything else on any other screen. The only other thing that I could say, well, I'll put this screen out here. Here's the bummer for light sweet crude, is that until it closes above 50.68, it has a falling price oscillator, bottom screen, below zero. And it doesn't get any more bearish than that. So another price level that this must overtake is $50.62. Of course, that number is going to change slightly depending on the movement of light sweet crude over the next how many ever days, minutes, seconds, things of that sort. Okay, we had another request out here inside the Tiger's Den. Mike from Littleton wants to take a look at TGB. I believe that's Taseko Mines. So let's go take a look at TGB out here. And you can always send me an email, steve@tfnn.com. Happy to go ahead and take a look at what you want to just help me understand. Are you long? Are you short? Are you looking to get in? Just give me an idea of what you're looking for, and that way I can make sure that I cover it. So as we take a look at TGB, and I don't recall, I don't know that I got from you, Mike, if you're in it, looking to get in it, where you're at. So I'm just going to have to give you the total overview of this equity. Here's what we know. So yesterday, this was able to, well, let me get the volume out here. So when we start taking a look at these ETFs and so forth, they really should have the volume on here. So we're going to go ahead and add that. So yesterday, this thing moved higher. And was able to close above the top of its daily market profile. So that's good. The level out there, by the way, is $1.35. Now, what it did here today, Mike, I don't know if you're in it or not. So I'm talking to both people in it, not in it. The beauty of what it did today was it came back and tested a level of resistance that now we can call support. That's the $1.35 level. So what this should do, Mike, is this should head up to the $1.55 area. That's going to be the top of the weekly box. That's going to get you into the swing point. That's the beauty of it. That's the February 13th level. If Taseko Mines, TGB, is moving into the February 13th swing point, the bottom there is 154, with more than 2 million shares, it's going to go test the top, or, and I do say or, it's going to take out that high and form an A to B equals CD to the upside. Now, to give you the potential for what this A to B equals CD, you're going to like this. It's a doozy out here because we like doozies. And that doozy would take you to a price projection out here. Are you ready for this? It sounds like we need that music on or something like that. Not the 1-to-1 A to B equals CD. That would take you to 236. But the 1-to-1.272, 270 would be the area that I would be focused on. Now let's put this on a monthly chart. Let's go see what's hanging at the 270 level, and really just takes you back to your prior swing point out here from July the 1st in 2014. So that is the logical place. We've got an A to B equals CD. Has not formed yet, has not confirmed yet, but that is what I would be looking at. What don't you want to see in the case of TGB or Taseko Mines? You don't want to see this close below the swing point from March the 9th. That low is $1.15. And at that stage, we could draw A to B equals CD patterns to the downside. We're not there yet. There's no reason to draw it. And Mike from Littleton, thanks for writing in. I hope that assists you with your trade there. We had Danny in Atlanta. Danny was wanted me to go take a look at gold futures, which we will do. And he wanted to look at, where is it? The GDX. Okay, good. So let's go take a look at both of those. Let's take a look at them in no particular order. out here. Let's go take a look at the gold futures contract, shall we? So let's go take a look at it. Give me a moment to get this up on the screen here. And there we go. We got the April contract. Here we go. I want to do one more thing. I should really want to do two more things out here. Yeah, all right. Give me a second here to pull this off screen to do this. I got to do some decorating out here, so just give me a moment to do that. And let's do this. Let's change this. We'll change this to black. Good old Blackie. And we're going to go ahead and change this one so we can see all of the rainbow-ish lines out here. Okay. So here's what's going on inside of the gold contract, and it is bullish as we speak right now. Remember yesterday we were taking a look at, we discussed how in the case of gold specifically, we had its price oscillator right there on the zero line. Remember we talked about climbing a mountain, getting up to the peak, looking over and saying, hey, I'm not going to jump because if you jump, it's going to have a big fall. That's what gold was doing. And it looked over, said, sorry, I have more to climb. And it closed above that key level of support, Stevie's red line, mixed with a little blue and green. Steve Rhodes with TFNN. We'll talk about this further when we get back for this break.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, and this is to all my wingmen in the den, noticing that I had the wrong contract up there. I don't know if you ever had this problem here, but my system automatically closed down last night while it was out for late dinner out there, and I had some new charts that I had been working on during the day and hadn't saved them. And so it came back from the late dinner, noticed it had reset. I was like, oh, man, that's a bummer. Just because, it does that auto save on spreadsheets and Word documents. And unfortunately, it doesn't do an auto save on the eSignal platform. So, I'm up early this morning and checking the sheets and then go work out and come back and then notice that where is the work that I did yesterday afternoon? Oh, I was not a happy camper. I'm still not a happy camper because I'm still now having to redo that work out there. Yeah, the Windows 10 updates totally screw you up, and they most certainly did for me. So thanks for having an extra set of eyes on even just some simple contract stuff that just didn't take hold. But anyway, back to the question at hand, which is, hey, what's gold doing basically? So now you're just going to take a look at Stevie's red line, and you're going to take a look at that price oscillator line. See, we're just slightly above zero. As long as gold is able to stay above 1220.70, it just simply says it's heading back up to the highs. Is it going to take those highs out? I don't know. But it should now head to the highs. Just like we looked at with regard to Taseko Mines, if it takes out those highs, it's a humongo. Is that a technical term out there? A to B equals CD pattern to the upside. And you might say, where would that take us to inside gold? And this is not out of the question at all out here. This would be a big one. Fairly big. And it won't be the 1-to-1, which is 1332. It'll be some extension of that, maybe 1369, maybe 1417 out here, but that's what you would want to look at. So the key out here is 1220.70. Now, interestingly enough, I believe, also in the 12 area, or 1217 as we speak right now, what we have is the brand new daily profile that formed 4 days ago, 1217. So as long as price stays above that, Danny, then this chart here looks very bullish. What you really need to see gold do, what it's done so far, it really ran right up to resistance earlier this morning, 1235.60. Subscribers and I, we took a look at the charts this morning, and we said, look, there were 3 reasons why gold was going to was at resistance. This was just simply one of them. And sure enough, gold has pulled back just slightly, but the retracement has been relatively mute. Now, with regard to the GDX, let's go take a look at it. Just slightly different pattern out here. So the GDX, let's put that up on the screen because Danny had asked for that as well. And in the case of the GDX, the different thing here, but you already knew this to a certain extent, right, which was that the mining equities took a bigger hit than gold. Remember, gold just got down to the zero line of the price oscillator, very bottom panel on my screen. The mining equities, they got below it. And so right now, it's not out of the woods. Just as simple as that. It is. The price oscillator has turned up. We really want to see this thing get above zero. We really want to see Stevie's black line out here get above the red line. I haven't talked to you about the black line. Some of my other charts is a green line. We're not going to talk about it now. Still doing some further testing. No, it is not a moving average. It is a special line, just as Stevie's red line is out here. And you can see when conditions, when you get that little cross out there, it's a little bit of a lagging, not much of a lagging, though, indicator. It tells you which side of the trade to definitely be on out here. You want to go ahead and use the whether price is also trading above or below Stevie's red line to assist with that. So the GDX, Danny, could pull back to 2230. And there wouldn't be just be a test of a old resistance level. Now it would be a support level out here. So, but this is going to follow gold. Now silver, you didn't ask me about silver, hi-ho silver out here, but let's go take a look at it. And then we'll go answer the next question out there, which was the next 30-point move inside of the ES Mini out there. And if we take a look at silver, slight problem out here, right? We really need silver. This is probably why the GDX itself is a little confused out here today, because silver has not made it above Stevie's red line. So $17.42. It had earlier, but it needs to close above $17.42. Otherwise, the price oscillator is falling. It is below the zero line. It's not that great. It's not really good news. So we need to see silver get some giddy up and go. So if somebody asks you which of the two is stronger, which of the three is stronger, you know that it is gold that is the strongest. And so we'll want to pay attention to those levels of support and make sure that Goldilocks stays above it. 1217, 1222, I believe, were the numbers out here. Now, the question was the ES Mini. And the question was, so let's go change this out here, and we'll take a look at it. We'll just use the same chart. That makes it a little bit easier, and we just kind of do things live here, right? No Memorex on the 1 o'clock show. So let's put up the current contract. Let's change this from daily to 30-minute out here, and let's go see what we can see. So when the ES Mini topped out, in the exact time that, not a 30-minute basis, that it hits top was 4 o'clock this morning. Now, what we know, what you and I know, is as it was pushing higher, it was doing it with less relative energy. It really began giving us that signal right here at 3:30. Then 4 o'clock, it gave us another one of those signals, and then voila, at 4:30, the cavalry showed up. Not the cavalry that was going to save this thing, but the cavalry that showed up out here. So as we take a look at the ES Mini, what we can see is it formed a real nice little top out here, the type of top that works on all different time frames. So as we take a look at this, and what subscribers and I looked at this morning, we looked at the ES Mini, and so as the newsletter went out around 8:30 or so, we said, this is set up for the ES Mini to pull back to 2380. And we want to watch what happens at that 2380 level. You'll see a little dashed red line out here with Stevie's reversal pattern out here, with the old black line below the red line. I think in the newsletter was probably a green line that I was using at that stage. That was giving us the signal that it was going to go back and test support. That red line was support. Now what we can see out here is that you break through support, and price here during the lunchtime came back up and tested it. So a very key level for the ES Mini is going to be this 2380 level. We'll see that my red line's at 2380.77 as we speak right now. And so we have a number of different things that are suggesting to us that that is going to be significant resistance. So the question was, Steve, something like this, I have to go back and take a look at it, is what do I see as the next 30-point move? My response was, man, you gave me something really difficult to answer. And the reason is because the normal vibration of the ES Mini doesn't move really in 30-point moves. It's more like 10 and 13 and 6, 15-point moves. But I'll answer your question. It's to the downside. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's off 18, S&P down 5. Speaking of Brent, we've got Brent in California online with us. Brent, thanks for calling. Thanks for holding. How are you doing today?
Well, thank you first for doing the oil. I appreciate that.
No problem. Is there anything else that you needed that maybe I didn't cover for you?
I just want to get your general opinion on it. That was a decent low. I mean, as far as we haven't been back there for a while, I just wanted to know if you thought that was something of significance or just a retracement or just, in general, what you thought about it. And the analysis you did is good. At this point, we're still kind of, in question whether that really is a, significant bottom or just something that's more of a retracement. We'll find out here. I guess we'll just keep an eye on those numbers you gave and take it from there.
Yeah, the odd thing is, and we can't cover it in the charts because it's not really in the charts. It's just in my analysis that I do over the weekend when I take a look at the CFTC commitment of traders data. And it's been odd because for the past month or longer, really it's been longer than a month, what I've seen the commercial traders do as a percentage of open interest is they got to the highest net short position since 2007 last weekend. Well, which really meant it was the Tuesday prior, so last Tuesday's data. And the reason why I say that's so they were now you've got producers selling oil in the market, whatever it is, but the highest net short position in light sweet crude since 2007. Not like at the $100 price range or anything, but at the prices that we were looking at out here. And what was odd to me is that it's a similar type position inside the U.S. dollar index. And so I was trying in my mind, I understood I could go through all the charts. I could go back to 2006 to see when interest rates started going up to, in fact, find out that the U.S. dollar index went south. It didn't go north like everybody was projecting. So I said, okay, I get that. But how is light sweet crude going to go south and the dollar go south at the same time? So, I don't want to use it. I don't want to use it to cloud your mind or anything. But it would appear that the data from commercial traders, they're communicating to you and I that the move to the downside isn't over. which then sort of makes sense with regard to if you are in the camp that the market is making some type of short-term top out here. So I just throw that out there for you. But I think we use those profiles. They can provide us with a better feel as far as what's going on, on the shorter-term time frame.
Yeah, it gives us good parameters to kind of keep an eye on. And there's a lot of, I don't do the fundamental stuff a lot, but there's no question that we have a lot of oil out there. It's many different levels here within this country, outside of this country, and so it's, there's
Sure.
that argument to be made that we have plenty of supply, and that's, these commodities are, I mean, the main, impetus for them to go up or down is supply and demand. And if you have, plenty of supply in the market, there's, it makes it kind of tough for the thing to want to go up. So we'll see what happens with it. I did want to talk to you about the stock we've talked about in the past, Nordic American Tankers, which I sold up in the nines, and I think even back when we looked at it previous, we noticed it had that big gap and that sign of strength, and I kept hoping it would come down there and close that gap. It finally did. I did buy in the 770s. I think I'm at 778, and I liked the candle yesterday. Not a lot of volume. That's the only thing I'm kind of having a little bit of an issue with. I'd like to see a little bit more happen there, but I'm taking a shot with this thing at this level. I do like that it came down there on lower volume to fill that gap, but I just would like to see a little better sign of strength out of here. But just wanted your opinion on it.
So I'd say that, folks, if we take a look at NAT is the ticker symbol out here, and one of the tools that we use to try to identify potential tops or bottoms is take a look at the wave counts, and we like to look for wave number 7. It's going to show up as letter G on this system, and you can see when we use this swing point out here, looks like from January 21st, and we start counting. Now just let me do this in red instead of blue, since I've got blue digits out there. What we can see is that the candle session that thus far has been the bottom, which was looks like March the 14th. Sometimes my dates are off by day, the 14th or the 15th out here, 2 days ago. That was your 7th wave move. So that is a positive out here. You've got a daily profile that you are now trading above. This profile is structured so that the buyer should be in control of the price area between 792 and 820. So you should see Nordic American Tankers get up to 820 to 828 as its next move. You're really watching for the 828 level because, Brent, once it's above that, then it's inside the weekly type ranges out here. And then at this stage, I think you probably just use traditional tools to be looking for, some new daily profile that might form, maybe some trend line, watch it break. A trend line just simply drawn from, looks like the high of September 23rd out here. You'd like to see it clear that area. That could be another area of resistance. But at this stage, I like the 7th wave move. I like that you're back inside the box. And, hey, yeah, if you get a nice sign of strength out here, that would be nice. But really, you had your most important sign of strength, right, back on November 10th, which is what gave you the confidence to go ahead and be patient and buy the bottom. So, congrats on that one. I like what you're doing out here. Just watch and observe the 820, 828, and maybe that descending trend line out here for the next move.
Okay, yeah, I appreciate that. It's funny that there's really not consistency across this group. If you look at other ones that are within the same sector, they're just completely different charts.
Which one?
Like Frontline, it just chops all over the place. FRO, and then that OSG I talked to you about, they have completely different charts. And so this one, I just had interest in it because of what it did, what we just talked about.
Sure.
Yeah, this one's all over the place.
No, I hear you. I hear you. Now, in Frontline, you had a little bit. Frontline is off of the bottoms here. Has had 3 with today being another sign of strength. Has had, in essence, 3 signs of strength off of the bottom, right? So if we just dissect the Frontline chart and we just do it from a shorter-term standpoint, we'll use the swing point from February 8th. There was 1 million shares. Comes back and gets retested with 856. Then comes back and gets retested with 870 out here. So that's a beautiful thing because at these lows, Frontline was testing a swing point on lighter volume. Better-looking chart in the Nordic American tankers chart because of that big gap to the upside and wide price spread. But here's another one inside this group, and you've had, three signs of today, two signs of strength prior to today, and every pullback has been on light volume into it. So in the case of Frontline, I'm not suggesting that you get into it, but use this maybe also as a barometer. If Frontline is able to clear the $7.13 level, that's its TAS daily profile, and it hasn't been able to do that as it's been doing this little sideways chug out here. If it can close above 713, it will run to 753, 785, and probably maybe help your trade in NAT out there.
All right. Thank you very much, Steve. Always appreciate it. Have a great day, and I'll plan on talking to you soon. You take care.
That sounds great. That was Brent in Martinez, California. Dow's off 6, S&P down 3. We'll be right back. We've got another caller on the line. We're going to go take a look at UNH, United Health.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new market-safe core commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN has just launched a special event in Tampa with Tom O'Brien taking place March 18th, sponsored by Nadex. Tom O'Brien will be presenting 2 workshops for a combined 2.5 hours of education, bisecting and dissecting his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. March 18th kicks off with a continental breakfast as we get everyone checked in, and that is followed by 2 75-minute workshops with Tom O'Brien. The first workshop from 8:45 until 10 a.m. will cover quality volume, cause and effect, and ABC structures, and the second workshop from 10:15 until 11:30 a.m. will cover swing points, testing, and the Tiger Gartley. Tom will then wrap things up with a question and answer session, which will be followed by a Tiger Luncheon Social on the rooftop of the Westin Hotel. The best part is that it's all free, but you must register to attend. Visit the front page of TFNN.com for all the details and to sign up today, and we hope to see you in Tampa on March 18th.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome Welcome back, folks. Let me cover this one thing for Jerry in Boston. He wrote in just in case I'm on the line here with Robert for the last 4 minutes. But he was what Jerry was looking for was McDonald's MCD. He's looking for a retracement to 124. That 124, by the way, happens to be the top of its weekly profile. So I like the number, Jerry. In order for that to happen, you're going to need to see McDonald's close below 126.49. Right now, there's not anything that indicates that it's going to do that. But 126.49, a close below that will give you the 124 level. Let's go to Robert in Buffalo. Robert, thanks for calling. Thanks for holding. How are you today?
Oh, I'm very good, Steve. Thank you. I'm down in St. Pete now. I'm down here for 4 months, so we came down in January. I just said I was because I am from Buffalo.
That's okay. You get to be from both places. That's a beautiful thing.
I would like to be from here, too. Anyway, if you remember, I was the fellow that can't see.
I do.
Okay.
I do.
I'm a little confused, Steve. I think I last talked to you back in December. There was a day you weren't feeling well. I know you were battling a cold.
Yeah.
Anyway, it's about United Health Group. I originally bought it at 129, and I got stopped out at 157 and change. I don't remember exactly what.
Let's not say you got stopped out. Let's say you took profits at 150.
Yes.
Yeah, I like that. Okay.
Yes. And then I talked to you, and you said put a buy order in for 155.70, I believe, which I did, and it never got to that point. It never executed. Now it's up around 170.
Yeah. The 155 number, it depends on when we were talking. If it was in December, I can see what that level was. And then some new data formed following weeks later, really upping that price to about the 156.78 and then the 157.34. But here's what I would suggest that you do at this stage of the game. I suggest right now, as I look at the daily chart, I'm going to say you don't chase it. And the reason that I say I don't want you to chase it just here, and I'll go look at the weekly chart for you, is that oftentimes, not always, but oftentimes when things make tops or bottoms, we take a look at the wave count out here. And when it gets to that seventh wave, which it is in today, it can be a sign of a retracement. Doesn't have to be, but it can be. And it would be a reason not to go chasing after this. Now, there's really nothing that looks poor on United Health on the daily chart out here. If that were to be a top, if it were to go ahead and pull back, what I would say, Robert, is now you'd be looking for the price of 164 as a potential buy area. But as it hits that area, what I'd like you to do is if it does hit that area, just give me a call so we can see if there's any new information on the chart that's been revealed to us so that we can say, yay or nay out here. But otherwise, everything looks pretty strong. This may have, and what the nice thing, I just flipped it to a weekly chart for you, and that 164 area is also going to be testing the week of February 13th as it was trying to move higher, and it did it with some pretty good volume out here. It did it with volume of 26 million shares for the week. So right now, the 164 area looks good. This is in a bullish mode. There's no question about that. It's just that daily chart suggests that I would say let's just not chase it. You don't need to. Let's see if this thing will pull back for you.
Okay. Do you think I should increase the number of shares that I bought? I was only in at 25 shares. That's a risk management piece of it, and I'm done with time out here. Just choose 1% of your working capital. Yeah. Divide that amount by your stop, and that's how many shares you should buy, whether it's 25 or 50 or whatever it might be. Alrighty. Hey, thanks for joining us and being down in St. Pete. Have a great Thursday, folks. Stay tuned. David White will be up next. Tom O'Brien and then Andy Heck. Take care, folks. All right.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.